Welcome to Fomo Consulting for your Xela stock analysis video on Tuesday, August 10th. Ladies and gentlemen, the company had great earnings, a great report, but the stock is down. Let's dig into why. And as always, the apes are winning, the diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel, and I'd appreciate the support. Let's get into the video. So let's look at the broader market. Overall, keep in mind Xela stock, AMC, GME, and many others are all tied to the broader market no matter what, unless there's a separating catalyst. Overall, S&P was up 4 points, Dow was up 162, mostly driven by the infrastructure bill being approved in the Senate and off to the House. We'll see how that goes. NASDAQ was down, got hit hard, and that is specific to Xela, down 72 points, and Russell was up almost 3 points. Overall, pretty mixed day. Not the best day in the world, certainly not the worst, but as you can see, tech, especially big tech, took it on the chin today. Google, Amazon, Microsoft, Apple, all down today, Netflix as well. So again, Xela was tied to the broader market, and we'll get into this very shortly. Crypto's up pretty much across the board today. Bitcoin down just a bit, at least at the time of this recording. No big deal, but certainly holding very strong above 45,000. So if you're in Bitcoin, Ethereum, Doge, all Litecoin, all congratulations. So Xela posted fantastic earnings this morning. Revenue was really the only miss, and that was only off 2.3%. But overall, a huge jump year over year, gross profit wise, 27%. EBITDA increase of 133%, which is absolutely huge. They even paid down, I think, about 150 million in total debt. Again, that's been the big knock on Xela more recently, and they did confirm several of the equity offerings have now been completed, and the stock did respond to that, albeit very shortly. But again, we're tied to the broader market, and there was a lot of selling pressure. We'll get into that, but overall, from a fundamental standpoint, Xela checked all the boxes. Their guidance for the remainder of the year remains on track. They seem to have a very bright future with many of the service offerings that they provide. So overall, congratulations to Xela. Well done by the management team, and certainly the stock should have responded, but we'll get into that very shortly. So again, I just want to look at the ownership of Xela from an institutional standpoint. Obviously, Vanguard, as you can see, Armistice, really the largest holders, as well as many others. Top mutual fund, again, Vanguard, Fidelity, Schwab has a few. So overall, a lot of smart money is involved in Xela. It's certainly not a dead play, in my opinion. We'll see how the new 13F filings come out and what's changed very shortly. But overall, again, smart money doesn't buy into companies, especially at this level, to hold these type of companies up if there's no belief in them. So speaking of belief, you can certainly see there's a lot of bullish belief in the options chain expiring on the 20th. 13,000 open interest on the call side at the $4 strike level, over 21,000 at the $5 strike level, and on and on and on. Pretty much a heavy consolidation of puts, but nothing like the calls. It's about 7,300 at the $2.50 strike level. So you can certainly see at least expiring on the 20th where the fight will likely be. Obviously, in the $3 range, the bulls need to beat bears, and I believe if we approach $4 again, we could set off a major gamma squeeze, especially in such a small cap stock such as this. There will be hedging involved, and obviously looking out into September, you see a very similar sentiment. So let's look at the largest holder today, the price action for VTI, which is the largest ETF holder of about 250,000 shares or so for Xela. Overall, you see a very similar chart to what Xela ran today. A lot of volatility, certainly tied to the NASDAQ, and you can even see that nice little sell-off there at the end of the day. No doubt very similar to Xela's performance. And as you can see with the NASDAQ, it followed it nearly to a T. So let's look at how Xela did today. Overall, Obviously, with fantastic earnings, conventional wisdom would say, hey, the stock should go up, right? But overall, with the broader market issues with the NASDAQ and certainly a lot of shorting going on, usually around the time of the earnings report, as you can see by the timeline, pre-market, they pressed it way down. Right before the earnings report, as you can see, they pressed it way down. And a lot of that is psychological warfare. Obviously, they wanted to limit the amount of Fomo buying, make it look like it was a sell-off, like the overall earnings report was bad, but nonetheless, the broader market also helped them out quite a bit today with the NASDAQ being down. So overall, from a technical standpoint and a logical standpoint, today was not the worst day we could have had. We certainly held the level of support. We closed at $2.85, down 21 cents or 6.86%, up a bit after hours. I believe it's going to kind of ebb and flow. Hopefully tomorrow we can piece together a good recovery day. But as we all know, as you can see with the NASDAQ, a lot of it depends on the broader market as well, if there's a lack of a major FOMO buying catalyst. But overall, you know, this is when I knew we were kind of doomed today. We weren't going to recover. It was right around lunch, shortly after the earnings call. Those three red candles represent about 1.3 million in total volume, much higher than most other candles throughout the day, including the opening bell candles. And those were obviously heavy selling pressure. So, the shorts came out today to take advantage of the overall market uh, conditions, and they certainly made their point. Obviously, they did not want this stock running today on the date of earnings. Certainly, there's a lot of psychology behind that. But most importantly, we held the very important level of support around $2.83. We bounced off of that and grinded up, albeit very, very slowly today. But we did bounce off of that level of support not once but twice. So let's look at the 5-day, 5-minute chart. Overall, you can see where that 283 level has been used now 3 or 4 times. Very, very crucial. If we break below that, we could fall off pretty quickly, at least around 260, 250, somewhere in that ballpark. Overall, we need to hold this level of support at least for now. Hopefully, we'll bounce and we'll have a better day tomorrow. To really get that gamma squeeze going that I was talking about earlier, we really need to break that, let's just call it 337 range. You can see where we touched it a few days ago. We got shot down even about 5 days ago. Below it, it's an absolute critical level. They do not want us to cross 350 because they know that there will be hedging involved, and that will only increase buying pressure. So looking at the 1-hour chart over a long period of time, we're pretty much in this pennant formation, just been in a consolidation with lower volume. You can certainly see where we've been stair-stepping our way from small areas of consolidation, just working our way up very, very slowly, very, very consistently. And the MACD is certainly an oversold, but the RSI is down close to 30, and it is very near a bounce point, which makes me very bullish over the next day or two that we should bounce from that area and have a few bullish days in our horizon. And that is just my belief. So let's look at the 2-hour chart. You see pretty much the same thing. You see a very low oversold RSI. You see MACD in a bearish trend. But overall, we're consolidating into that pennant formation, lower volume, which is very typical. We are looking for a breakout over the next few days. Hopefully, it will be on increased volume to show conviction, whether up or down. If we break out of that with low volume, it is not necessarily a breakout from a technical perspective. So let's look at the daily chart. Overall, you can see even on the daily, we're still in that pennant formation, alligator, just kind of chilling, not really bearish or bullish, but overall, that's a good thing. Again, RSI has been pressed down back to neutral, and we need that MACD to make that little upward curl to have a bullish crossover. That will likely set off some additional buying. So let's look at the Ortex data. Overall, the average age of short positions has gone up by about 2.5 days to 9.57 days. And the short interest trend data, as you can see, has gone down, and there have been a lot of return shares. over the last couple of days due to T2 settlement, and you can certainly see the trend lines have followed that. But today we did have an increase in short interest. So looking at all the short data, currently according to Fidelity, 86.6% is retail owned, as you can see. And there are 10 institutional owners, at least due to 13F filings. Shares owned alone a little over 11 million, about the same as yesterday. Cost to borrow close to 10%, about the same as yesterday. Utilization still a very high 82, but we need it into the 90s, specifically I would say 95 or better to really squeeze this thing out. Short interest did go up 13.22% to 25.79%. Short interest percent of free float. And the borrowed shares today were 2.43 million. No doubt they took advantage of the weakness in the broader market, obviously being pulled down, and they returned 960,000 shares. Total volume very, very low today. The ask and bid spreads were pretty far apart, which really kind of slowed down any sort of momentum if you were watching like the level 2 data. But we're at 30 million and short shares available 750,000 at the time of this recording, with a bar fee according to Fintel of 9.35%. So looking at the options trade, options volume did pick up a little bit today, 19,000 total volume, and what was traded was exceptionally bullish, nearly 9-1. And as you can see, the larger trades today were a lot of September and August calls, specifically around that $4, $5 range. A lot of open interest building into those areas. So hopefully you found this video informative and entertaining. If you did, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel, and I'd appreciate the support. But as always, thank you for watching, and I hope your life is full of green candles. Take care. Bye-bye.